With the summer temperatures heating up, it appears a trade war between the United States and our largest trading partners is also heating up. As we have often stated in the past, financial markets do not like uncertainty, and all the uncertainty about how a potential trade war may impact global markets is weighing heavily on the minds of investors. What is a trade war and how does it impact investors? Let's use China as an example. The United States buys $506 billion worth of goods from China each year, but only sells $130 billion back to China. This creates a $376 billion trade deficit in favor of China. In an effort to shrink the trade deficit with China, the United States has imposed tariffs or taxes on many of the products we buy from China. The goal is to raise prices on Chinese goods in hopes of encouraging buyers to instead purchase from American manufacturers. As an American, this sounds great. However, China clearly doesn't like this idea, so they retaliate by imposing tariffs on U.S. goods going into China. This includes many agricultural products, making U.S. farmers unhappy. As you can see, the whole issue of a trade war gets complicated, and each time the United States imposes new tariffs, the impacted country feels compelled to retaliate. History is not on the side of tariffs, but our trade deficit has never been higher. As you can see, all this creates uncertainty, and as we said earlier, financial markets do not like uncertainty. With concerns over the potential for an all-out trade war, how did markets fare in the first half of 2018? The results were quite mixed, with the S&P 500 index up 3.4% in the quarter and is now up 2.7% for the year. The tech-heavy NASDAQ Composite generated gains of 8.8% for the year as investors seek high-growth companies to take advantage of our growing economy. Value-oriented companies continue to lag, declining 1.7% for the year. The best performing sector was small-cap growth stocks, rising 9.7% for the year. Small-cap growth companies have benefited the most from corporate tax cuts and are considered to be the least impacted by global trade concerns. Finally, international stocks are down 2.8% for the year. What can investors expect in the second half of 2018? Most likely, we will continue to hear a lot of news about trade battles, but don't let this scare you. The current earnings-driven bull market should get another boost when second quarter earnings season begins in mid-July. Current estimates have earnings growing at an incredible 20% over last year. Our advice for the last 18 plus months has been to stay the course and don't let headlines scare you into selling. This has served our clients well and continues to be our recommended course of action. By the end of the year, we believe patience will be rewarded with gains of 6% or better on the S&P 500 index. From the HM Capital Management team, thank you for watching.